Can I buy a commercial property with less than 35% down? If you're out in the marketplace, or you've been out in the marketplace looking for commercial mortgages for any period of time, you probably hear all the time, well, you need 35% down, how much can I buy this building for? You need 35% down, and 35% is kind of the number that you hear from bankers, brokers, mortgage specialists, consultants, whoever you might be using. The reality is that if you own a business and you're looking to purchase a commercial property, you can do it with less than 35% down. So if you have 5% or 10% or 20%, you may be able to purchase a property. In fact, we were recently part of a transaction where the business was able to borrow $8 million without having anything down. Nothing, no cash, zero. Very strong business, big earnings, lots of cash flow that moves through the business, and the bank they wanted to build their own facility. They'd been renting for quite a number of years, and they wanted to go build their own facility, give them some more flexibility. And so the bank lent them $8 million to buy the land, build the building, and they had to put no cash in whatsoever. Small businesses or private enterprises who are looking for less than $8 million, they can easily access up to 85% of the property value with a mortgage. So with as little as 15% down in cash, a business could go and buy a commercial property and find that it's probably not that tough. Banks will look at the overall financial stability of a business, and as an example, in one case that we saw come through emilynow.ca, where a business had requested our help, it turns out that they had they're in a little town in rural Alberta. They had an acreage that they had a TD Bank mortgage on, and they were renting a series of bays that they were operating their business out of. And so we went to TD Bank, and TD Bank says, well, tell you what, we already have a mortgage on their residence, so why don't we expand that mortgage a little bit? We'll give them a little bit more money on their house, that basically 15%, and then we'll fully finance the bays that they're looking to now buy from the landlord that they've been renting from. So in this particular case, a private enterprise was able to borrow about $800,000, but they didn't have to take any cash out of their business in order to do it. And that's a big deal, because most private enterprises, medium-sized businesses, live and die by cash flow. So when you say, oh, to come up with 10% or 15% or 20%, that can actually be really, really tough. And even if the business could come up with that cash, it leaves a hole in their cash flow, which can be very problematic. So banks know that, they're sensitive to that. And as long as you've put a good package together, you've run your math, you understand what your business can afford, you're prepared, you'll see that the banks actually have quite a bit of flexibility in what they can do for you on helping you get a mortgage for a commercial property. Because cash flow is key, one of the things that you definitely need to know is that if your mortgage payment is, say, $5,500 a month, if you go through and you do all of the calculations, the monthly mortgage payment would be $5,500 a month. The bank is going to want to see that the business generates at least $82,000 or $83,000 a year in net income. And then they're going to want to see that averaged over a couple of years. So here's what you need to know. If you're looking for a mortgage for a commercial property for your business, and you don't have 35% to put down, make sure that you've run the math and averaged it out. It happens quite frequently where a business will send their request in at emilynow.ca. They will say, oh, we're having a great year, we think we can afford this amount of money based on our current financial statements, and this is great, can you help us? But because the banks are going to average the net income over a few years, it might be a case where the business, even though they're having a good year this year, maybe last year wasn't so good, or not as good as this year or the year before. And so when the bank now goes to average out the payments, the bank will say, well, you know what, you actually can't afford the amount you thought you could. We can still approve you, but it's going to be at a lower amount. So make sure that you're prepared. Make sure that you know that you can afford what it is you're going to make an offer on. And buying a commercial property is way more affordable than you might think it is. Certainly if you have a lease payment right now, and because of low interest rates, you could consider converting that lease payment into a monthly mortgage payment. And you may not need as much cash as you think you do. But if you want to get started, Go to emilynow.ca, that's MLENOW.ca, and run some numbers. It doesn't cost you anything to use it, and you can see what the interest rate range is going to be. You can see how much cash you might need. You can see what the average income is that you're going to need, and so we'd encourage you to do that. But can you purchase a commercial property with less than 35% down? The answer is yes.